Finding the money to start a small business is one of the toughest challenges an entrepreneur will face. We'll tell you the most common sources of capital in today's Small Business Report.
Certainly funding for small businesses is an age-old problem and challenge for small business owners.
Mark Hogan, president of Small Business at Bank of America, breaks down the sources of funding into three categories. The first is personal capital.
I'm talking about things like personal savings, friends, family, relatives that are willing to invest in the company.
That's also sometimes called love money. It's not easy to attract investors to a startup, but people you know might share your confidence and give you a shot. The next most common source of funding is consumer credit.
The most common forms certainly could be credit cards, could be home equity loans, or could be mortgages. Basically using a consumer product to fund a business.
And the last place a small business owner often looks for money?
The third category is business credit, a loan in the name of the business, most likely backed by a personal endorsement as well.
This can include a business credit card, which acts much like a consumer credit card, only it's in the name of the business. Eventually, as the company grows, that category might also include a business line of credit or a business loan. For smsmallbiz.com, I'm Colleen DeBase.
Hi, I want to thank you for taking some time and spending it with me. I want to talk to you about something that's near and dear to my heart. I've been in business for myself for several years now. In fact, going back to the 1990s. Before that, I was an investment banker for 15 years. And I got an opportunity to study a lot of businesses and understand what they do and what they don't do. Once I got into business for myself, what I realized is that very frequently I was responsible for everything, including signing my name personally for the money that I spent or the money that I borrowed. And what I mean by that is whenever I had to buy, whether it be office supplies or my advertising campaigns, I would use my credit card, and although my American Express was in my business name, my name was right underneath that name, which meant that I was personally responsible for it. I also had to sign leases, and ultimately when I was looking to really launch my business, I went to a lender who asked me to personally guarantee a $1 million loan. In doing so, I sat down with my attorneys, some of which I was paying $700 an hour. I was talking to my accountants, and I was asking the question, why? Why do I have to personally guarantee these loans? And what they told me, besides because that's the only answer that they knew, it was as a result of me not having established business credit. When I asked them how I went about establishing business credit, they said they didn't know. And I got to thinking about Donald Trump, Bill Gates, Michael Dell, and anything that they did in business and how they were able to go forward in their business without signing for it personally. In fact, when you think about all the turmoil that we've seen in the markets with all the banks and the brokerage firms that have gone under and out of business, when you think about it, not one of these CEOs complains about their personal credit being ruined as a result. So as the matter of course, I took it upon myself, and my mission really became, how do I work with individuals like yourself, showing them exactly what I learned in the process so that you don't have to sign for things personally, where you can actually build business credit and get yourself in a position where you could get an additional $25, $50, maybe $250,000 of business credit in the business name without that personal guarantee. What I'd like to do is send you my ebook. In this ebook, I am going to show you step by step exactly what is necessary for you to establish that credit and get you on the road where you can separate your personal life from your business life.